Good morning, everybody. Sorry I missed yesterday morning. I went to vote and got there before 7 o'clock, and the line was crazy. I got back here late. Anyways, so markets got a little ugly yesterday, and so they pulled back close to the area that I suggested could be possible in the weekend letter. That 50 and 20 MA, I'll just get the pointer out here, is just waiting down below. It's converging moving averages, which is right lined up with this congestion area. Now, yesterday was a pretty decent down bar. And, it started out with a bit of an erratic kind of a pattern, a bottoming tail and a topping tail. And we'll look at the S&P. These are the futures, so they trade 24 hours. The S&P doesn't look exactly like that. But now we've got this range expansion bar. And so, this would be a possible place for it to turn. But, just because it's the top of that area, what we would call minor support, the size of that pullback, whatever it measures, I couldn't tell you without my protractor, would be about right for a pullback within a move like that. However, the erratic pattern of this bottoming tail, topping tail, see how these open and closes? Of course you do. I'm pointing it out to you though. They're clustered together there like that. You're going to have a lot of resistance there. So we really don't want to see the market go up today. If it did, we really have to see a big bar to be convincing. So I'd rather it come down here. It might come all the way down here. We really don't know. But you got those two lurking moving averages that are pointing upward at that point. So it is an obvious place for traders that'll focus on that area. Just because they're widely followed moving averages, of course. We'll see what happens. The other reason is I'd rather it go down there because it gets away from the congestion. And so, you see this area right here. So the whole idea behind the void concept is a momentum move, which obviously there was, and then ideally a period of time of going sideways that moves the current price away from the resistance area. So, a move down, of course, would leave this as a resistance area, but it's going to be smaller than what's above. And so if you should go down there, then maybe typically what we look for is some stabilization, which often takes about a day, maybe a day and a half on the hourly time frame, that then starts the move up. So strong move up, hit the resistance area. This is right where our internals said, be careful. And honestly, when they tell you be careful, historically, markets don't turn on a dime. So it's just a heads up. They rarely just turn on a dime like this one did. So things change from time to time. But I've said in the room, and when people email me about internals on the daily time frame, I said, we do not use them like we would an NYSE intraday tick indicator, which is the markets were moving up in one direction like this over the course of, say, an hour and a half, and we get a tick extreme. Yeah, you're probably going to get the market to turn within the next 5 minutes. So daily internals don't historically aren't that pinpoint accurate. So we'll see where today brings us. This comes up here, a little down move, some kind of erratic, and we'll just have to see how it shapes up. Sell set up here on the 5 minute. Things are just kind of hanging there. Let's take a look at SPY here. So big red day. Futures give us a different picture than the futures do a lot of times. And so here's the pullback. Here's the pullback. The attempt to make the turn, which historically is not a good pattern, to have, this move up and then that move up, and your measured kind of move, which is strength, to have such a shallow pullback. Any shallow pullback that is so close to the prior high is going to be tricky because the sellers are right there. And, and after this kind of a move, buyers are not going to be as aggressive here as they were here. Common sense. So now the look of this, while the moving averages are right here, if I look at this as a potential measured move, and it certainly is, the down move, attempt to turn, topping tail, what you measure here to here, puts it around down here. So we've got two areas to focus on, those rising moving averages, and there is some support there. And then, of course, where the red bar was ignored and it reversed back up pretty hard and gapped higher and higher until it moved up toward that resistance. So we'll see how that all shapes up. And I've spoke about this daily chart, possibly creating an M top. We just don't know yet. I mean, I think it would have been a higher probability if this move would have really come up here. But now that it's on the way down, I think it starts making me think trading range. We got this election coming in on strong now, a couple of weeks away, and we're all going to hear the truth of the reality of the next 4 years, whether you like it or not. We'll see how that turns out, of course. And let's see where the NASDAQ is here. See, things are up here a bit this morning. So this isn't a bad pattern. I mean, yeah, it's erratic, bottoming tail, topping tail, the way it went down. It didn't have as potent a bar yesterday. And let's just copy this for here. Duplicate it. And let's just put a line over here at our minor support point. Now, you always hear me tell you that that's a subjective reference point. So why am I using it? Because everybody else uses it. And you can see that's right where prices stabilized. But so as we look at the hourly, we find out what's real, right? And so let's see here, that's 10.2. 10.2. So this is the top of the area. This is a good lesson for those of you that are relatively new to Master Trader and how we look at things, and what we say is objective information rather than subjective. So this is subjective as a reference point. Prices traded below and back above it. So why are we using it? As I said, it can become a self-fulfilling prophecy. But let's see why it really works when it works. Because on the way up, there's a reaction to that right here. And while you can't see it on the daily time frame because of this is condensed, right? A daily chart, you can see it on the hourly time frame. So as prices went down there, traders looking to cover shorts or possibly play a bounce were focused on that because it's price support right to the left. I was saying, why do you think the price would go to major support and not minor support on the daily? Well, I don't know for a fact, Ludwig. As I said, that was a thought. When I was talking about the S&Ps, it's at minor support. And so the erratic price action here, my preference was for it to go down there because when it's the reason we want to avoid and at times an extreme move is because that leads to a bigger move in the future. So when we're trading within congestion or where reference points are so tight together, our expectation is going to be that we're going to get chopped up or we better be very nimble. So if we can get a more of an extreme move, it opens up the door for bigger moves. And that's why we look for a price void. So look here. See this big move? Of course you do. Now, if this begins to deteriorate, you can see it's right at this area here. This comes down here. And the same story, we just kind of flipping things around a little bit here, multiple time frames, and whether it's at the bottom or whether it's, at the top. If this goes sideways, and this is the idea behind a 1, 2, 3 continuation pattern, right? Here's your big bar. Now, if today is a choppy day and this goes sideways, movement over time, just above this void, right, it begins to build up an area of supply above. Why is that happening? Because traders, institutions, whoever they are accumulating here, thinking, why would they? Because they think it's going to go up. We don't know if they're right yet, right? This was an extreme move down. So if they can chop it around sideways and it starts to break out, well, we have to go with that. We always have two scenarios. Keeps us objective and open. But now if it goes sideways and starts to break, there's going to be nothing to stop it from going down. And should that happen, it's going to come down here because this extreme move is right here, which created a void. And then as it comes down there, right, we're making some assumptions that'll happen, right? Just keeping everything transparent. It comes down there, the buyers are going to be there. So just like it falls fast into some congestion area, buyers are going to step up because that's just what they do. Scalp or bounce, cover a short, maybe you get a bigger move. So if we now get a nice quick move down here, the buyers are going to show up again, 100%. They're going to be there. And then we do our factory work. What happens? Climactic bottoming. Do we get a retest? What we do. We're just going to see how it plays out. So how does this affect your trade selection when you see a buy or a short setup swing trade? Well, I don't have a buyer setup yet. Right? It might form here. It's not going to be a very good one if it's a narrow range bar, but if it goes sideways here, so let's put a twist on this a little bit. What if this day ends just like this? And it doesn't make a stock, John. Doesn't make a difference if it's a stock, if it's the futures, if it's corn. It's all the same stuff. It doesn't matter. It's just pictures of what people are doing. So let's assume that this day closes like this, bottom of the range. And then tomorrow it spikes down to the moving averages and forms a bottoming tail bar. Now I've got a setup I'm going to like because it's spent some time. It's got a downside shakeout, and it is going to be providing some time going sideways away over here. So we'll see how it unfolds. Right now, we don't have anything. This is nothing. Right now, it's nothing that we want to trade as a swing. It's not a quality pattern. There's no reversal yet. We're not interested. Spiders, we're not interested. This certainly looks like it's going lower, but if today turns out to be an inside day, well, we'll just see what happens from there. All right. All of these, what I'm showing you is a let me just call it an encyclopedia of price patterns that are between my ears, which I've accumulated over a long period of time. The way you can do it very fast is to learn the concept that I call bar by bar analysis. And when you do that, rather than starting to think about absolutes and patterns, right, that maybe you were shown in some book or whatever, when you start looking at whether the prices are going up, down, or sideways, and you look at to the left, support and resistance, and now you start applying bar by bar analysis, you'll figure out what to do. Now, it doesn't guarantee that it's going to be a profitable trade every time, but you're going to know what's happening and what to do next. You'll know where to put your stop. You know if you got shook out, whether you should re-enter again, or whether it's going exactly as you thought it would. All right. Sorry, this is turning into a lesson here, but, get Dan on here. So this is messy, but it held the bottoming tail bar. So we got a little bit of a different pattern, but nothing convincing yet. Right? Inside day so far. I was getting the same intraday patterns here. So I know, Fabio, but I got to get done here. Got to get Dan on. We got to get into the green. Well, you're in the green room, but market open, all that stuff. So, we do lessons every day. So I don't know what's going to happen here. Inside day, maybe today. That's typically what follows a big day here. There's your move. So a 1, 2, 3 that's 1. 2 is choppy day. 3 is the next move. Again, unless today, for whatever reason, we do have a void above turns into a big green bar, you're going to hear me saying something completely different tomorrow because I got a different bar. Russell, not bad. Granted, it's whippy, bottoming tail, topping tail, but that is a consolidation so far after a big move. That's pretty bullish, right? So it's not anything to try and buy or sell yet. But if this can continue to go sideways while, after a move like that you got to respect it, even though it's erratic. Bonds, and look like they're heading down to our target down here. All right. There's your little cell set up there with the topping tail right at minor resistance, but you can see the cluster right there. So you got to be careful with these. Right? You got to get in here with this kind of a pattern. Forget what it is. Pattern's a pattern, don't matter what it is. You get in here, there's going to be buyers down here. It's supposed to go through it. Right? It's in a downtrend. Right? Below all the moving averages. Supposed to go through it and come down to the next target. Let's see what it does. Oil. Choppy. This is time. It's getting erratic here. Time to change. Gold. Still working on trying to prove that's a shakeout. I don't know. Got to get above that high of last week's high there. Silver, pretty much the same. Basically stay away until we get some better price action. And lastly, we like to look at transports. Not bad. Had a big move, and it's under the green bar, so a little bit of trouble there. Let's see what happens. It gets down there. That's why we monitor all the markets, and you can see the topping pattern over here on the hourly time frame. So short review of what I said. Looks like it's going to go a bit lower yet, and maybe today's just going to be a resting day before that. Let's see how it ends at the end of the day. Okay, just take a peek here at pretty negative breadth, which is what it was supposed to do. Remember, I was saying when it went up here, the breadth was in question. Didn't like that breadth not being stronger. And, now the daily is coming down to an bullish extreme. So coming down here should get that. And, this sentiment, I don't know. I'd really like to see that come significantly lower. But we'll see how it plays out. Anyway, we'll take a look how it all shapes up. All yours, Dan. Do I trade biotech multi-day? I do not swing trade biotech stocks. I was asked in YouTube. No, I don't like that risk.
All right. Good morning, everyone. We have a lot of earnings and gappers to look at. All of our opens seem fine. The only possible problem child, we got to keep an eye on Piton here. We have a 140 call spread, but everything else looks fine. So I'll wait till the market open. Let's look at my interest list here in gappers. Google, I mentioned yesterday, if Google, when it was red, I said if it could then take out the day's high, it would look fantastic. And then it sold off with the rest of the market yesterday afternoon. So now it looks very bad. And the news came out that the DOJ filed an antitrust suit against them. So I'm assuming that could have been part of the afternoon sell-off in addition to the weakness today. But that would be a call spread candidate for us, McGraw, over yesterday's high for Friday. Let's look at that in the first 30 minutes. Mark asked me about selling a call spread on LII that had earnings. Sure, that's a nasty bar. That's a nasty bar. So let's go through our checklist and see if the options are liquid and what we can get for Friday. This had a Bear Island reversal with yesterday's gap, but now it's back up here. And I don't know what's going on there. It looks like a Robin Hood toy. Recent IPO. I think Debbie mentioned this one yesterday, and I said, yep, yesterday was the day. YouTube's asking about how about Marriott? That was one of our 2 stops yesterday. We had a put spread in Marriott, and I just said take our stop. I didn't know what to do. That was a failure. Ugly red bar. But in terms of if you're asking about any new setup, I don't know. It's kind of a bear flag on the weekly, but it's had a waterfall sell-off yesterday, which is very bearish. I don't know. I mean, there's too much support to be a good 1, 2, 3. And so I have no interest in that right now. Unless maybe I did look at a call spread yesterday, actually, to leg into a condor, but there was no juice over the high. 11, let me write these down from Jason, TRNE. Yeah, nice gap up from a little bullish retest. IQV, gap's too big for me, Jason. PNR, I can't tell where it's gapping, there's no volume. AEP for Sam. Yeah, it was bullish consolidation. It was on my watch list. Can't tell where it's gapping, so I don't know yet. You can see what it does later. IBM, yeah, had earnings last night, and it's getting whacked here. I know somebody said they were buying it into earnings and then buying some puts, and so I decided I'm going to make a lesson on that about is it worth, the pros and cons of buying. It's a married put. Your long stock, long puts, that's a married put. And puts cost money. And that's what I'm going to go through. I'm going to show you the quotes, I'm going to show you the cost, show you the break even, etc. Hey, Enzo, your drop down. All panelists and attendees. But no, Roger, to short that thing? No. I mean, look, there's no short there, Roger. That's a nasty gap down, and, it's 120. No, there's no setup. EXC. Could be a day trade short. There's not much volume, but maybe 30-minute low. Oh, no. Enzo, what are y'all doing to me today? Enzo, this is not a breakout. It's up 28 bars, far from the 20. Breakouts are from consolidation. This was your breakout on October 5. This is not a breakout. I mean, this red bar and green bar ended to be a continuation pattern, but no, that's not a breakout. Watch. Enzo, your drop down. Anthony, your drop down. You got to change these to all panelists and attendees. Uber, I don't know what your question is. It's down a bunch of bars. I got no pattern. There's nothing of interest there. Anthony, I already talked about this. Yeah, had a gap breakout yesterday. It's extended now from the 20 pre-market. Looks like it's right at these all-time highs. There's no pattern, folks. We're pattern traders. Everything, you got to give me a compelling pattern on the time frame that you're trading. There's nothing here. It's gapping up to resistance. There's nothing on the 15. WB, bull put credit spread. No, Matul. I mean, it came in and it got slammed yesterday with a topping tail. I did no, I wouldn't touch this thing unless it had a beautiful W bottom retest. Based on yesterday's bar, I have zero confidence that that prior low is going to hold. None. So you got a bearish engulfing on the weekly. You got a price void. All right. YouTube's asking about SYF short. Had earnings. It's here in my list somewhere. So 28.15. So it's a bearish gap, but it's still on support. So maybe 30-minute low, but it's not a tier 1 where I'd be looking to do anything exciting, at the open. Facebook, yeah, I had somebody on YouTube saying they got filled on our bear call credit spread, and I also got an email, so I posted it in our open trade position. We did get filled on the call spread. Yeah, let's move stop 30-minute high. Let me go ahead and just do that now so I don't forget. He said that we're already at 75% of max gain. $10.20. PG, yeah, PG had earnings. Let's take a look. And we also have a call spread on Beyond. Gapping up, but it looks fine. All right, PG 140. Maybe it's a bullish gap. Yeah, it's a bullish gap over this bearish real body, Dave. So possibly maybe 30-minute high, but put it in a window, a 5-minute thumbnail, and see how it sets up. Here, look at this. ACI is also a nice gapper over this red bar, Albertsons, but it's kind of, gapping on my target. Let me keep going here. All right, we looked at that one. EMKR, I don't like the way it trades, but it's a very bullish gap. CDNS, gapping up a little bit, but garbage, you're gone. Stolled had earnings. A bearish gap, wow. Look at all those bulls that got caught. That's a breakout failure right there. PPG had earnings, and you're garbage, you're gone. HXL gapping down. It's a bearish gap. This is weird. This print here is not showing the print on the daily, but it's a bearish gap. HDB. Yeah, it is for me for a swing, Zeke. If you're trading the 5 or 15-minute chart, wait for a pattern where you have a recognizable entry and stop. Yeah, WDC had an explosive day yesterday. Yeah, it's on my list. Now that's a beautiful intraday because it came in and is building a little rounded bottom now. So that's a candidate for 30-minute high. Yeah, I didn't go through all the opens, but yeah, we have Roku. That's correct, David. Well, IBM. Oh, that is a nasty gap. Wow, I don't know what they said or didn't say. They're getting punished.